Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at Mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
Thank you guys for joining today. We are in Texas, one of the best markets that you could ever invest in and put time in and money in. Just very strong. We have a live project in Dallas, right in the middle of Dallas, not 2 hours north of Dallas, away from jobs, but right in the middle of Dallas. And we're going to give a little project update on that. We're going to talk about the endowment theory, and we're going to talk about asset allocation, why the wealthy invest in commercial real estate. Who do we know who's wealthy who invests in real estate? Robert Kiyosaki.
Warren Buffett.
Yeah. The manager or the owner of the Cowboys. He owns the property right next to ours. It's a good location.
Oh, does he?
Yeah, he does. He does. So athletes, when they age out of athletics, their money stops. So what do they do with their portfolio of money? Well, they look at something like asset allocation, where you have a certain percentage of your portfolio into alternative assets or real estate. So you can stay diversified. That's what the advisors advise the fiduciaries. But you want to be able to have a certain portion in each asset type. So we're going to talk about that today. We're going to get going real fast. We want you to spend the time to get to know us, and we can get to know you. Thank you for being on time. Any questions about commercial real estate that are burning, put them in the chat and we'll handle that. I have 20 years of commercial real estate experience. Our team has 400 years of commercial and construction experience, and we wanted to bring everybody. You're going to see Denvip Davis on some of these discovery calls. Denvip in the middle on top, and it does show. Good, perfect. And he is our VP of Investor Champions Club. He's also co-general partner and investor, multiple times investor, and very successful at what he does. We have, going left, we have Albert Mendez on our marketing team. We have Ed Lovo manager of Investor Champions, business development, marketing. And we have Stacy Tucker, accounting, and also owner in the Prestige at Mayhill. So let's jump into it. Any questions about commercial real estate that we can handle? I would love to see those in the chat and engage. I know we have some pretty seasoned people on the phone. Okay. Okay, can everybody see my screen?
Yes, I could see it.
Okay, great. So here is a property that we is our sister property that we built in Austin, and it was built in 2018, sold in 2021 for a profit of $22 million. And it is a Class A luxury property. It is 22 North in Austin, 240 units on 14 acres. Getting all these properties mixed up. But you want to invest with somebody who has a good track record. You want to partner up with somebody who has a good track record. We closed on the Prestige at Mayhill in June of 2023. We bought it off market, put entitlements on it. We have doubled the value. We've almost tripled the value and have equity in the property. And the quick status on that is as of December 6th or 7th, we are submitting our second round comments for the city on our building permit. Super excited about that. So we also have our tree removal permit that is just about to be approved. So things are going to start looking a lot different. It's a little bit invisible, for a while, but things are happening in the background. We're on the phone with the city and the architects and engineers all the time. So this is a beautiful look at 22 North. This is a common area, and Stacy and Denvip have been there. Your thoughts on the common area at 22 North?
Yeah, so my thoughts on that deal, the common area, right? If you look at the common area, right, it's applicable to like going to an A-class luxury resort there. It was very laid out, right, and thought about, right? So even like the gym area, you can hold 15, 20 people in there at one time there. So it's a very excellent layout, right, for, A++ apartment there where high net worth individuals can take in, lease a place and they'll feel good about inviting their coworkers over to it.
Oh, yes. I didn't think about that, but inviting their coworkers. Our tenant type is the 30-something professional, and they would have a place to hang out with their coworkers.
Yeah, that clubhouse was just beautiful with the waterfall marble countertops, and it would be a really nice place to even hold a professional board meeting or something if you needed to. That's how professionally well done this decor was.
Yes, it was. And so what we're doing with that interior design, Stacey, is we're cookie cutting it. It works. We want to do it in the next property and just keep with what works. Because here's the point. Wealthy people want to find investments that are recession proof. And we were so fortunate to have breezed through the recession through the rent moratorium, where the CDC had told the landlords, hey, your tenants are not going to pay for a year. And now the Supreme Court has told the CDC that what they did was unlawful. Well, that's great, but the government was involved in our businesses for a year. And fortunately with this property, 22 North is a Class A++. Tenant type is 30-something building their career, professional. They just always paid their rent. And they did during the recession. They paid their rent. So recession proof. It was a microeconomic and a macroeconomic test. It was a great test. And so now we know what assets to look at and what assets to stay away from. So it's cool. That's why we stick with this. Why multifamily? Well, actually, wealthy people do stick with multifamily. Not that it's our favorite, but people need a place to live. And so we have an inherent need of survival. Yes, eating every day and living indoors. Okay, that just struck me as funny. Cash flow, capital appreciation, tax advantaged. It's a hard asset, so it doesn't walk away. And actually, interestingly enough, the 30-somethings are not buying as much as they were before. And so the homeownership rates are declining, and they're not buying that single family. So they're renting by choice. This is a market of renting by choice. They don't need to rent. We're going to skip through a couple slides, but I encourage you that if you want more information, get back with Denvip and his Investor Champion team at zoomingwithprestige.com, and you can book a meeting on his calendar. You can book a 30-minute Zoom, or you can book a 15-minute discovery call with this gentleman who has several positions in the Prestige. And I have a big position in the Prestige as well. So background as an engineer, can do accounting at a CPA level, and 20 years in commercial. So got some pretty great tax benefits too. We're at the end of the year. You've got depreciation. We can share that depreciation. 28 apartment buildings depreciate over 28 and a half years, and we can force all that nice depreciation through a cost segregation study into the first couple of years, and we can distribute that and share it with our partners. So that's a little bit complicated for a webinar, but that's what we will do with those buildings. You've got passive income tax benefits depending on your structure, your financial structure. How we source our deals. We actually have the 400 units being built, and we've got our final civil being approved this week with the city, back and forth with the city all week. Getting together with the general contractor next week. As of December 7th, next week, we do a page turn with our MEP, structural and architectural. So that's mechanical engineering, electrical engineering, and plumbing engineering. And you might have to get a replay on this and go through it again. Structural engineer, architect, general contractor, GC owner's rep, construction project managers. So everybody's getting together next week in Dallas for a page turn. And we've been working very hard on that. So back to the slide, how we source our deals. We have this deal, which is the Prestige at Mayhill. And you can get more information on YouTube's at prestigeyoutube.com, prestigeyoutube.com. We have 4 more off-market, start over. An engineer who's been talking a lot this week. We have 4 more off-market properties to put in the pipeline. And so that's going to come next. We're structuring a fund for that. And it's pretty secretive for now, but you can see how lucrative our deals are right now. We have $10 million of equity in this property. And co-partners are attaching to that. So they're secured, they're securitized. I want to take a second, stop sharing, and start going into endowment theory and asset allocation, because the focus of this webinar, besides our track record here you see on our screen, and you can get a replay of this wealth webinar if you ask Dinbit for it at zoomingwithprestige.com. But we want to start talking about why the wealthy, why would Warren Buffett be investing in real estate? I thought he was a stocks guy, but commercial real estate has half of the risk and twice the return as the stock market. It doesn't have all that volatility. Unless you're a day trader and you watch it every single day of your life, morning, noon, and night. But who has time for that? We are time-starved professionals. We are protecting our nest egg. We have other considerations that we need to, problems to solve. That's it, problems to solve. So I want you to think a little bit about what problems in your financial portfolio you need to solve right now. Do you need to make a year-end investment to reduce your taxes? Many advisors right now are telling their clients to make a contribution because they need to fix their tax situation. Are you a time-starved professional where you want to start putting some income away into a hard asset that doesn't walk away, and that you're collateralized for, and make either a safe return to shelter your money, or if you want to go a little bit riskier in your risk comfort level, then do you want to make a quicker return? Do you want to put money away for your college, for your kids? Do you want to put money away for university for your grandkids? Will your wealth outlast you? So these are some of the things we want to talk about on the wealth webinar, and some of the things that the owner of the Cowboys has gone through, that Warren Buffett has gone through, that the athletes have gone through when they're setting up their portfolio and they're assessing their risk tolerance. So I want to stop sharing right now and go to our team. And Dimvip, what do we want to talk about first?
Yeah, so let's begin with asset allocation there. So if you think about asset allocation, right, that's considered as the backbone of any type of investment strategy there, right? It's about distributing your investments across different asset classes, right? You're looking at stocks, looking at bonds, real estate, alternative investments there. And you're just trying to balance the risks and rewards there. And
Yes.
The key to this is just diversification there. By combining assets with different return drivers, you can reduce volatility while maintaining the potential for strong returns there. For an example there, if you had private equity, it might enhance the returns through illiquidity premiums there, while the treasury inflation protected securities will help protect against unexpected inflations there. So asset allocation, right, is something that you really want to look at, right? Just spreading your assets across like stocks, bonds, real estate, and alternative investments there.
And that's what the advisors really want us to be looking at. As a fiduciary, I'm all about that. I want people to be diversified and securitized as well. That's why we give collateral in the hot Dallas property. God forbid I graduate to heaven early. Then what happens on that day? Well, people are made whole from the equity they're attached to. Number one, they don't have to worry about a capital call. because we're bringing partners in against that equity, that value in the property. It's worth about $15 million right now. And also they get their share, their pro rata share of the sale of the property. So I feel good about that. So when we're talking about asset allocation, we have, it's like a pie, and investors are look at about 5 to 8% in real estate, or you can also diversify in real estate. So with our fund that we're setting up, we have the ability to invest in a couple different recession-proof properties, and you can be diversified in that way. Dinbip, can you think of any advantages of bringing that level of thinking up to a higher level, and instead of like working in your portfolio, but work on your portfolio? What do we need to be thinking about when we're working on our portfolio?
Yeah, so when we're working on our portfolio there, we just want to make sure that we're well diverse, right? So if the market goes up or down, right, that you will have, that you will have some stocks, 401k, that you'll have something invested in hard real estate there. As the market go up and down, right, that you will be able to make sure you have a balance there, and you will continue to see a return on your overall investment there, having a diverse investment strategy.
Right. And so when people have a diverse investment strategy, they need to be thinking how they can put funds into a collateralized deal, into a hot market, into a team that has 400 years of commercial and construction experience. There's a lot of power-packed things that you're talking about, and I think it's a good thing to pause on a Friday afternoon on a wealth webinar and think about that. So I would encourage you all to get with Dinvip and his Investor Champion team and just talk through what the opportunity is. It may not be right for you. We always give our investors the first right of refusal on every deal. So it may be something that might not fit your wheelhouse or ours, but I would encourage you, if you want to get more information, to go ahead and contact Dinvip and his team at zoomingwithprestige.com. You can set up a 30-minute Zoom with the owners, or you can set up a 15-minute discovery call with the owners, which is pretty special. We're not syndicators, we're owners. I think you can see that here. And so we're not creating an investment so that we can get that fee. We're all in. We're all in here. So I wanted to jump next to Stacy Tucker in accounting and have her talk about the endowment theory. I wanted to talk to Stacy about the endowment theory and her perspective on how that planning is done and why, and the advantages of solving that problem.
Thanks, Dale. Basically, the endowment model is kind of used by like Yale and a lot of hedge funds and private equity. It's all, again, like Dinvip said, it's all focusing on diversification of your assets so that you can so that you can weather these trends in markets and stuff, and you're not going to just get a big loss. So you're going to focus your assets in private equity, hedge funds, and real assets like commercial real estate. So, and you're kind of for illiquid opportunities. So we're not talking about the stock market where you're buying and selling and it can just change rapidly. You're going long term, a balanced model, and that's kind of what endowment is.
Okay, so they're talking more about illiquid asset, hard asset that doesn't walk away.
Yes.
Okay.
Yes. So that's where commercial real estate really fits in, because you've actually got the land, the building, I mean, it's a hard asset that they can't just magically disappear like stocks do.
Yeah, the stock market is so volatile. I haven't had a 401k or a 201k in decades. So I'm all in here with real estate. We're vested. I see a gentleman who would like a call with the owners. That's great. And we'll get back with you on that. Also, please, just go to zoomingwithprestige.com after we're done with this call and just set up some time at your convenience. I know that his calendar is super booked, but maybe a 15-minute discovery call would be good. So Stacy, with families, with generational wealth, how does that really affect that planning from the matriarch or patriarch of the family and what they're thinking about for their kids and their grandkids, and how to make sure that grandkids and great-grandkids go to college, university, or are taken care of in whatever way they want to take care of?
Right. So your main goal is to look at the long-term wealth aspects. So like if you invest in a commercial property, you're going to get those rents and you're getting that monthly income coming back once. So it's staying with them. It's not a one-time investment and then you're done. And then you can also roll in those, if you sell it, 1031 exchange to the next project. Like you said, we've got that fund coming up. Again, we're trying to take one project and grow, and then to another project and grow, and another project and grow, so that when I'm gone, my kids and grandkids and stuff have some wealth and some security behind them that will keep providing a monthly income through those monthly rents and things like that.
Yeah, that's a great point. You've got a multitude of profit centers. You've got that cash flow from the rent. You've got cash flow from our grab and go store in the amenity building. You've got cash flow from some of the amenities that we're bringing on for our professional tenants, like wash and fold, drop your dry cleaning and wash off and pick it up the next day in your locker in the big mailroom. We've got the convenience of that grab and go store. So if you have a popcorn emergency and a Diet Coke emergency, hey, we're there for you during the day. So we've got the different profit centers. We also have underground parking, which we can sell. We have covered parking to sell. We've got e-cars, electric car stations, which we can sell. We also are putting a billboard on the side of building on the west. Think about the layman's terms for that, the building on the west. So the city has done so much in terms of development and expansion in the area. It's super great. They have put millions and millions into an overpass because we have 30 million cars per year going by our property, just a quarter of a mile. So 30 million cars a year, that is growth in our area. It's all infill. It's so high of a growth pattern. 15 years ago, we saw that kind of growth going up to McKinney, with lots like ours selling at about $500,000 an acre. If it had utilities and zoning. And now over the last 10 years, we've been seeing the same thing in our area as well. So it's all infill, it's all growth. Just pretty cool. We also have some videos that are called Locale that are on the internet on our YouTube channel. And let's jump to that because we have so much education that is available for people who want to get with us. 100 videos. Let's see if the internet from the hotel here is working. It's prestigeyoutube.com. Prestigeyoutube.com, very simple. It talks about the market. It talks about, let me see what's going on.
I think one of the big advantages of the Prestige location is that train station they put that's a block away. So you don't even have to drive now to get to work. You can hop right on the train, and that's amazing. And it serves 3 different markets.
It serves 3 different markets, Stacy. Our professional tenants can go to Plano in 30 miles. They can go to downtown Dallas in 30 miles. They can go to South Lake in 30 miles. So it's not like those projects that are being built 2 hours north in Anna, Prosper, Sherman that are too far away from jobs for our tenants. So we've got 3 job markets that we'll be able to serve here shortly, and we'll start advertising for tenants in about 6 months. Our YouTube channel, you can go and you can subscribe to this YouTube channel. It's free, no charge, but it's prestigeyoutube.com, and you're going to see a lot of good education here. We want you to take a breath, and we want you to do your due diligence on us. We want you to ask the hard questions. Hey, have you ever declared bankruptcy? No, as a developer, I can't sign on those big loans if I've declared bankruptcy. Another hard question, but a good one. Are you now, or have you ever been in any deal where you've lost investor money? Wouldn't you want to know that? Yes, we want to. So I can say, honestly, in 20 years, no, never in 20 years. So we protect our investors. We're giving a great deal. We're giving such a high return. You're going to be surprised when you compare them to the other deals that are going across your desk. Plus, we're giving collateral. Yeah, people don't do that. It's like you run right by that word, and it's not even mentioned. Okay, so here's Denvip. We've got some shorts with Denvip, and you can see him speak about his investments and his work in the team. We have a video on our permit, our distribution week. We're getting ready to distribute again. We've never missed, a distribution. We've never missed a distribution. So it's a good thing to look at. I don't know if it's right for you, but it's a good thing to look at. Going back here a little bit, guys, as we wrap up, here's a deep dive presentation on our YouTube channel. So you're going to want to write down prestigeyoutube.com, go to the deep dive. Now, what's this about? We've got a nice introduction from our presenter, and let me see if I can get it. Oh, yeah. So this is a presentation that we did for a big RIA, and it goes right in. Mike Carrasco and I have worked together for 17 years, and we talk about the build, the construction, the team, the methodologies, the design docs that we used in 22 North, which is great. It's about 30-minute deep dive. You want to watch that. And this is why the wealthy invest and how the wealthy invest in commercial real estate. We've got a site walk, 22 North, where you can see that property if you're online. You're in San Antonio, and you can't go to, well, San Antonio is pretty close to Austin. You could drive right by 22 North on Baghdad in Leander. Okay, that's available right there. There's another 22 North video where we're talking in the common area. That'd be great. There's a couple good videos. There's also a video, it has a gray background, and I want to point this out because it is how to do commercial due diligence, what questions to ask, and what you should be expecting from the owners. Well, it would be sponsors mostly that would be answering those questions from a webinar. But we're so busy doing our daily work that we're not really great at webinars. So, developer, engineer, accountant, and we're better at doing our deals. And that's why we're more profitable and we're sharing. Denvip, what do you think about these resources and what people should be focused on?
Yeah, so as you look at those resources, right, the YouTube videos, right, I think people should really be focused on, looking at why do they want to actually invest in multifamily investing. What I tell all of the potential partners that I speak to on those discovery calls or those 30-minute calls, right? We want them to become comfortable with the deal, and we want them to understand what they're investing in. So that's why we put all of those YouTube videos out there so they can educate themselves. And once they educate themselves, they can make a decision whether they want to invest in multifamily. And as they look at other multifamily deals, they can compare our deal to the other deals that's out there when it comes to multifamily. Because I feel that our deal itself, right, when you look at the team experience and you look at the underwriting and the location, right, those three things right there will set our deal apart from other deals. And if you look at A++ apartments that's being built up from ground up there, if you look at the distributions that we send out right now, most of the A++ apartments, they don't start distributions until they actually start leasing up the places there. So if you get into those type of deals there, you won't get into distributions on other A++ new developments until like 3 years later there. And we're paying distributions right now.
Yes, we are. That's a really good point. And so if somebody's from San Antonio would like to get on a call with the investor, with the owners, let me start over. If somebody from San Antonio would like to be on a call with the owners, what steps should they take to get in touch with you?
Yeah, they can just go to morefreedom.com and they can sign up for morefreedom.com. And once they sign up there, they have a selection. They can do a 15-minute discovery call where they can ask me questions there. And then from there, what we normally do there, we actually set up our due diligence call there. And those due diligence calls there, what happens on those calls there, normally the first call there is for me to educate the person on the project itself and learn a lot about the potential partner that comes in, because we're looking for long-term relationships with the partners that come in where you can roll from this deal to the next deal there. And then we'll schedule a call from a call to the next call. We'll put us in the second call there. And then the second call, what we normally do in that second call there, the second call, right, is just to answer your questions there. And then we'll start talking about potentially putting you into the deal room where you can actually go and do your own due diligence there. You can look at our feasibility studies, our permits with the city there. You can look at our PPM agreement. You can look at the different appraisals that's been done. And then that third call there, we normally can wrap up at that point in time if you're a potential partner there and get you invested into our deal there. So I'll be glad to have a call with anyone that would like to schedule, that 15-minute discovery call or due diligence call.
Mm-hmm. Okay, so thank you for that. Now we have an expectation of what that path is, and that's great because we want to help you continue your due diligence. And it's not about closing the deal, as you can see on the first call or on the first Zoom. It's about walking through this couple-week process in order for you to continue your due diligence. And then, we also don't upsell. No, we don't upsell because we feel like that your number is your number. We do have a minimum of $50,000, and but your number is your number. And then usually what happens, guys, is people start to trust, and they trust all of the documentation that we have in the portal with the engineer, the approvals, the architectural, the pro forma. They start to trust and they come in with a little more, but that's not a requirement. Now, a little synopsis as we finish. We have about 38 investors. I've raised about 8 million. We've raised about 8 million in private money. We have 10 million in equity to attach to, but we literally have about 38 investors, happy camper investors. They're happy with the progress of the property. They're happy with the how far we've gotten and where we're going. This next year is going to be very, very exciting. A lot of movement. We have people, 25% of the partners have come in twice. Another 50% of the partners have come in 2, 3, 4, 5 times. So 7 times even for some. And so we have a great track record, and we have a lot of happy camper investors. So if we are picking up 1 or 2 partners, then that's great. You know, we're in it for the success of our partners, and you get to learn more about commercial real estate along the way, and you can shelter your wealth, and you can get a great return that is collateralized. So when you're working on that piece of utilizing the endowment theory for generational wealth, or you're working on that piece of adjusting your asset allocation with commercial real estate, a hard asset that doesn't walk away, then you're right there. When you have that success, then that's when we're happy. So I just wanted to thank everybody for joining the panel today, and let you know that we appreciate you. We're very excited with the updates that are coming out on the YouTube channel, prestigeyoutube.com. Just very excited. And we will talk to you soon. God bless.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at Mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.